Welcome back. Well, the TSX is climbing today. It's up by more than 150 points. And in fact, the index is on pace for its fourth triple-digit swing just in the past 5 trading days alone. For a look at what is driving all of this volatility in the market, Diana Avigdor is joining us now. She's the Vice President and Head of Trading at Barometer Capital Management. Diana, always great to see you. Thanks for joining us. And what a start to the year. Are you believing the past 2 days or so of rallies to the upside?
I heard a really interesting speculation as to why the volatility in the beginning of the week, beginning of this year, and I sort of buy into that a little bit. There was no change. There is no change in themes. So there was no reason to sell winners, buy losers, and that sort of thing. Oil continued to take us to lower and lower levels. Interestingly enough, and we can talk about it in a bit, the ETFs did not reflect the new lows in the commodity markets, which was a little bit of a disconnect. But the most important theme that I've seen is market wants to force Europe to come out with a QE. And if you notice the last couple of days, the worse the economic news that were coming out of the Eurozone, the better the market liked it. So yesterday we had the negative CPI. Today we had negative factory orders out of Germany. The market wants Draghi to put his money where his mouth has been for the last 2 years, because the contagion fear that North America, particularly U.S. growth, will be impacted and dragged down by European woes. So market wants to force Europe to take care of the disinflation and the lack of growth, and to jumpstart so that we don't get the negative contagion. But otherwise, in terms of thematics longer term, the relative strength and the outperformance of the sectors that have worked in the fourth quarter of 2014 are still showing up now, like technology and healthcare and the financials. So there's a little bit more, shall we say, interest and a little bit of bottom picking in the gold and the oils, as oil sort of stabilized, and so did gold, despite the fact that the U.S. dollar continues to rally.
Right. Diana, it's interesting, and you do bring up a great point, which we have to always talk about, is what's going on in Europe. I want to point out that those markets were up 3 to 4% pretty much across the board. There's a huge expectation that Draghi's got to do something. They've got to add stimulus. But that aside, Diana, I'm also hearing that so many money managers outside of the United States are putting money to work in the United States markets. I mean, that's the place that so many people are going to these days.
Yes, it's true, and we've discussed this in this forum before, that if you could invest more in the U.S., you had both the diversification of the sectors and the stocks and the growth and the macro that was helping you, but also now the currency was no longer a drag on foreign investors. So you see, for example, the treasury market continues to be bid, despite the fact that equities were also bid, and I might add that the yield sector, such as the REITs, you've seen those rallying as well, as people are searching for yield, and that sort of thing. So a lot of people, it is a fairly big consensus trade. And so if there is a risk for contagion, you've seen the volatility really, really high, and the more that the worse the numbers are, the more likely it is that we get some help on that front, and it doesn't drag down. The more the market likes it, because we want U.S. to continue to pull the world out and up.
Yes. Out and up, those are the expectations. But Diana, let me ask you this, though, because as you take a look at the TSX, it's gaining strength at the moment. It's up 181 points. What do you do in the Canadian market right now? It feels as though there's some stabilization, but I'm hearing from people that they're not quite convinced.
In terms of trading, what we've been seeing is we've seen some balanced programs. We haven't seen big block trading, which is more of a testament to people having more conviction in getting into stocks at a particular price, so more like a balanced cash flow operational thing. In terms of where you should be in the Canadian market, look, there is some very good names that provide some very good yield. Yield is very important. You have some of these REITs are doing extremely well. We've seen some capital raises today. You have certain asset managers and some insurance companies. Yes, they've come off a little bit, but they're relatively doing okay, and they've relatively done well relative to the TSX. And I might also mention Jonathan Golub of RBC, who noted yesterday, he said, the Canadian market, if it was better balanced in terms of its sector weights, would have done much better. So there are things that are working. Some of the consumer names. Look at Celestica, for example. Some of the bonds, the corporate bonds, some of our Canadian names. Maybe even some energy corporate bonds. Those are decent investments. There is where to go. Just unfortunately, stay away from some of the smaller cap or more, energy. And unfortunately, it's very heavily weighted in the TSX. If it was a little more balanced, we wouldn't feel the pain so much.
Absolutely. Diana, always good to see you. Thank you so much for joining us.
Thank you for inviting me.
Thank you. That was Diana Avigdor. She's Vice President and Head of Trading at Barometer Capital Management, joining us from the TSX.